And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report, a daily market show where we go through anything that is grabbing our attention, break down the news, help you guys understand what's happening out there, and hopefully have some fun while we're doing it as well. We've got Noah. We've got a big crew here today. We got Frank, as always, on Breakout Frank Friday. Fun Day Friday. I don't even know what the official name is, Frank. What are we calling this?
It probably depends what you think of me. I call it Friday Frank Day. But
I like Friday Frank Day.
But there's a few other, words that start with F that maybe other people use. I don't know.
Like fantastic and
fabulous,
fascinating. I mean,
it's well, we actually have a Fab Five here today. We've got David hosting. We've got Emily, who's hosting the Women in Trading webinar tonight. Emily, how are you doing, dear?
I am doing great. How are you guys doing? And it's I think the name is Breakout Frank Friday, isn't it?
Breakout Frank Friday. I mean, it is a mouthful. I mean, we can just keep adding words to it, I'm sure. Fun Day Friday, Breakout Frank. We're just gonna, I don't know, make it up as we go.
We'll just call it Friday. How about that?
C'est la vie, brother. There you go. Noah, and you are here as well, my friend. How are you, sir?
I'm fantastic. TGIFFFFF. We're having a great time here.
Oh, God. Noah loves the opportunity. I got to tell you, throwing him softballs here. All right, let's break down the markets here today, guys. Little red candle. We're above the 20. We're below the 9. We're above the 50. We're in an uptrend. In fact, we're even above the old pivot point here. Noah, I'm not overthinking today. There's a lot of interesting action in the market. I read the headlines. I went through the news the way I always do. Essentially, markets are blaming COVID-19, which I'm trying to change the way we label that, Frank, to the official World Health Organization's COVID-19, previously known as the coronavirus. They're saying that's the problem, which we've been saying that there's a risk there for quite some time now. But really, guys, we're still in a beautiful long-term uptrend. This is just a hesitation day for me. Noah, what's your read on the market right now?
Oh, I was just looking at those stats. There we go. Market, this is a pretty steady pullback, Tim. I mean, as far as pullbacks go, it's about as orderly a pullback as you like to see, right down into a rising 20 known support resistance zone. It's already slowed down a bit. I'm not, it could get bigger. The pullback could grow, but we got some points right here that make it real easy to decide. You've got a known support resistance zone here at the 33, 29, 33, 30 ballpark in that neighborhood, and the rising 20. And if that's a very defendable, zone where I think the buy the dippers will find that attractive. And if it doesn't hold, if the selling pressure increases and we see it drop, it would have to violate that zone first. Mm-hmm. So that's one of the things I like about this pullback. It's pretty orderly so far. And just watching it kind of play out, I don't think the market's in a big fear phase. I think this is a profit-taking thing.
Yeah. And, Frank, on Fridays, you tend to kind of slow down your trading and wait for Monday anyway, knowing you over the years. I think you kind of hesitate a little bit here at the end of the week. I'm that way as well. 2 red candles in a row coming back into a longer-term uptrend. Frank, what are you seeing in the charts right now?
I mean, Noah pretty much hits it. We need we need something. We need a candle, the good old fashioned need a doji, right? So we need some sort of slowdown. Like Noah said, we could pull back a little bit deeper. And as we kind of look at, the S&P versus, in particular, the NASDAQ. When Noah first jumped in the room today, he pretty much said what I thought. He said, there's going to be a lot of pullbacks this week. and I tend to agree with that. So we're still waiting. We need a little bit of from a broad perspective, we need a turnaround, but we're going to get, if you want a nice, pullback, AMD is going to have one. Johnson & Johnson's hanging out on the 50-day moving average as we speak. There's pullbacks galore. I got another pullback, but I'll keep that one for later. It's just, a pullback at the end of the day. And the reasons, again, have we started to, break support and shown reversal in the trend? No, is the, I call it C19, so I don't mess up the name.
C19, I like that.
It's easy for me to remember that one. That story's not going away. I think we continue to respect the story, but beyond that, we respect the price action.
Back that up a little bit here, Noah. Really interesting, just looking at that chart for 1 second. Look at the difference in the depth of the pullbacks. Last year in May, we had a real pullback to the 200. Then in August, we had the same thing. What do you think is the difference when it comes to technicals of when it spins from a short pullback into those deeper pullbacks? Is it an accentuation of the news? Is it usually a catalyst? Is there something a new trader should be watching for when something is going to spin into a deeper pullback?
That's a tough question. I mean, when there is a story or a big headline, I do think that is probably the easiest thing to note, but it's also the easiest thing to overvalue.
Hmm.
My advice would be don't overthink it. Let it pull back, let a candle develop, see that reversal, see some momentum. As long as it's, hasn't, pulled back, quote unquote, too far, whether it's shallow. I prefer shallow pullbacks or a little deeper. I know like Matt prefers deeper pullbacks. To me, wait for the confirmation candle, wait for the confirmation and price action. That way your read on the news, which isn't always going to be right, no matter who you are, right, isn't really putting that roadblock. So I think the news is the big thing. The catalyst is the big thing, but I think that's the thing that we can all mess up the most, whether we're new or old traders.
Yeah. Yeah. And I always went by the axiom that if you don't have three red candles, it's not really even a pullback anyway yet, Noah. But what about your thoughts on this topic
Well,
in terms of
that
depth?
third candle makes it magical.
Yeah.
And the 20 period moving average makes it very actionable. I would say, if you look back at the previous pullbacks, I think a really good marking line in the sand is the 50 period moving average.
Mhm.
If it violates the 50, it tends to be a deeper pullback. If it takes, here it pulled down to the 50 and then broke. So in this case, it could pull all the way down to the 50 and still be in an upward channel.
Yeah.
And still be overall, bullish by the dip sentiment. And then if it breaks the 50, it may go deeper. And how deep, you're going to see it correct all the way down to 3,200 to 3,100 to the 200 period moving average there. That's all, would be just speculation and conjecture at this point in time.
Mhm.
So I would say rather than make it an objective, subjective decision, make it an objective decision where, hey, if it violates the 20,
Mhm.
it probably fills that gap to the 50. If it violates the 50, well, then you're going to have to look down to the next support zone, and use those as very objective lines in the sand.
Sure. There are very subtle differences across the indexes. I want to take a quick peek at them, and then we're going to finish with the Russell, and I'm going to get your take, Emily, on the Russell. Dow Jones is actually pulling back below the old pivot. And so if you look at the YM contract, not as strong as the S&P, but the NASDAQ is not even at the old pivot and much, much stronger. In fact, the strongest index across the board without even a debate here on the NASDAQ, King NASDAQ. There's no doubt about it. But then the Russell 2000. And Emily, you're a cash flow trader. It's one of the things that you like to focus on. I know you do a lot of things, including, volatility and earnings and other stuff as well. But the RUT and the Russell 2000 is an important index. This neutral action, is this good for a cash flow position like that you trade, Emily?
Are you kidding me? Yes, I got triggered into IWM because it hit 170 a couple of days ago as a hedge for my condors. But yeah, I love it when it hits a resistance point and comes right back down and stays in the middle. It's great for cash flow traders.
Yeah,
we love to see this.
No, those indexes, there are some subtle differences. Is that telling you anything?
Well, tells me that I'm going to be really excited about pullbacks in the tech sector.
Yeah.
And that's kind of where I see the hottest market action. And then I'm really quite happy that the Russell's staying in place. That's one of those things where I know a lot of the cash flow traders, the condor writers out there are thrilled with that.
Mm-hmm.
And I think it definitely, just shows us that the tech sector is the leader in this market at this point in time. And the S&P's been strong, but not as strong as tech. So
mm-hmm. Yeah,
pullbacks and tech galore.
By the way, give me FXI real quick while we're talking indexes and broad markets. I did read some stat here today, Frank, that Chinese car sales in the last 6 weeks are down 92% year to date. So now maybe those people come back and buy cars in March and April, whatever, when everything's back up and running. But that was just one data point as a reminder. And there's a whole thing over on FactSet I got to dig into that digs into the actual economics behind the impact of COVID-19. Guys, this is not done yet with the markets. The U.S. markets are pulling back. The Chinese markets, they're going to have a deep impact, Frank. And I don't know if the market really cares about the economics right now, but eventually they're going to have to, don't you think?
Yeah, eventually they will. That just like I said, it doesn't have to be today. It doesn't have to be this week. I think pretty much everybody's on board that this is going to slow growth down. At this point in time, it's, you don't see anybody who kind of sings the other side of that. How much, and again, as you guys have said many times, it's still fairly early in this process. But yeah, sooner or later, I mean, we are going to have to pay the piper, right? I mean, that's.
I agree. I agree. That's where my head's at. So we're going to keep watching the markets. But by the way, as a trader, we just trade the information day by day. King Dollar hit its head up near 100. Finally, a big red candle. I read some Fed chatter yesterday and this morning. Basically, Bullard and some other people were giving speeches, and Bullard was on CNBC actually saying that we don't have to cut rates. I'll believe it when I see it, Frank. I think if global GDP is impacted, the Fed absolutely will cut rates in the summer. It's like one of those things where show me instead of tell me. And it's obviously a red candle up here at the high, but still very bullish on the dollar, don't you think?
Yeah, absolutely. And if you, are a dollar trader, you're probably really liking this pullback as an opportunity going into sometime next week. Unless you're purely, a day trader. I don't know how you're trading this candle here, but you have to we even held the 9, right?
Mm-hmm.
Even, held that 9. Definitely a candle like this. And again, I'll be the first to admit that I'm never going to be the trader that's doing something off of a huge candle like this. Sometimes for better, sometimes for worse, but always never. But I do think we have a pullback opportunity. One thing though, with the way the dollar really ran, kind of thinking about that space or that next level that Noah pointed out, if we take out that 9, we've got a ways to go, but before we get to the 20, which also lines up with that old resistance zone, right? With quite a bit of history there in that 98.5 range. So that's going to be an interesting one to watch develop. I'm not a dollar trader, so I'll just kind of sit on the sidelines and watch it, but should be interesting.
Yeah, going to be interesting. There's no doubt about it. And obviously, the dollar is such an important thing to look at. I got to get Mark on board. He doesn't like looking at the dollar lately. In fact, he always checks out.
See, I look at the dollar. I just never do anything.
Right.
Because it is important. It's, it's kind of a big deal. It's the dollar.
Interest rate policy for sure. Crude oil, biggest commodity in the world, the one that I actually think will be impacted by COVID-19 if it actually does shake itself out the most. Kind of showing some interesting V-shaped pattern here. Old support. Now we're above that in general, Noah. A technician finds a way to convince themselves of anything, though. They would draw a big zone and say, well, we're just at the zone of old support.
Well, I don't know how you're ignoring that beautiful cross right there, Tim. That 9's crossing the 20, and that's a clear signal you must buy, and it's going to remove it's just going to talk you right into it.
Talk me into it maybe for a swing trade, but I'm still going to pass. I mean,
I'll pass too. I'm waiting for a pullback on that.
Here we are, 53.38. I'm going to ask you guys a question more likely to touch next. Okay. Everybody here, I want to get an answer from 50 or 56. Would you bet on 56 or 51st?
56.
Noah?
I'm betting on 52.
All right. Yeah. Emily?
I'm going to say probably 50 before 56.
That's a tough one here, which is why I lean neutral, Frank. I think you could make a debate. Obviously, you got this little move to the upside. It could easily V-shape rally into that 250 period moving average. There's some old support points back there. But I'm still seeing a bear retracement in general. Obviously, the cross back up. Mixed signal is going to leave me neutral. Anybody got a different opinion than that?
No, I think you're spot on. When you ask that question and Noah takes the easy way out, M comes with one answer, I come with the other. I think that kind of lets you know that no one has that strong, it's not a really strong opinion right now. There are some bullish signals. We closed above the 9, we closed above the 20. Like Noah said, we are getting that crossover. I know he said it jokingly, but it is a signal, right? It's not necessarily the signal. We did break a little resistance, last week. So there are some positives, but we've still got a lot above us from a technical point of view that we have to deal with. As everybody knows, this is very, very sensitive to current news. If you're a swing trader, I don't know why you're not finding other things to trade.
Yeah, that's where my head's at. I mean, obviously, people might have systems with cash flow, Noah, and that kind of stuff, or day trading, but that chart feels very mixed, don't you think?
Yeah, definitely. And it's one of those things where I think the news is going to push its weight around more than the technicals will. And, I love technicals, but for me, technicals is always one of those no news is good news situations, because then you're just trading technically. But when you have, global economic GDP slowdown potential and a glut of inventory that's going to go along with that because of the COVID-19, it could escalate, and you could see that really overpower, a signal like a cross up like that. There's a certain point in time where news will trump technicals.
Gold. All right, boys and girls, ladies, Emily, women in trading tonight, right? Gold is a juggernaut. We all know it. We've all been saying it. We've all been watching it. There's no question about it. Here we are, 1647. I don't even know where to target on this. I would keep an open-ended target, Frank. If we were prepping something here on that breakout, we always do have a T1. We might even on T2 just say, hey, listen, trail stop,
Yeah.
because it's so beautiful. Now, Noah, there is some history going back years and years and years back on that chart. What are you seeing here in gold, Noah? Give me an idea on where you would see maybe the next stopping point, pay expectations, whatever it might be.
Well, when it comes to gold, I always think $50 increments. And so, here are the fact, if you kind of look where it ping pongs back and forth, 1550, 1600, you go back and look at it, 1500, 1450. So here it's testing 1650 right now. If it blows through that, 1700 is my next stop. Yeah. My next target, I'll say, next stop isn't like a train. It's a bad analogy, but we'll get there from here.
Emily, you love gold?
I love gold. I love owning the physical. I love trading the ETF.
Who doesn't? I mean, it's a beautiful chart there, Frank. That's breakout Frank Friday right there.
That is pretty. Will you go to a weekly, please?
Will you stop telling me what to do all the time, Frank?
I will. It's Friday.
You did say please. Okay. It's got those old highs out there, like 1800, just, and 19.
That 18 is kind of staring to me in the face. And I mean, that's the, what's currently here to hold us back, and so that would be my second target. That'd probably be my target if I'm being honest, but I mean, that's a nice break. Is today the entry day? Well, if you probably are already in gold, if you're, thinking this way, but if you're not, something that will develop, and maybe today is your entry day. I don't know. Probably wouldn't be mine, but.
No, I don't think it's new entry day, but I do think probably the only thing that's really going to hold gold back is if Wall Street and institutional money gets an aptitude for risk and ignores global, concerns and just pushes money back in the stock market. Yeah. So if the pullback ends up developing, Frank, and they buy the dip, right?
I'd almost expect it to be more neutral in that scenario. Yeah. I mean, that's the way it's been behaving now for quite some time. That's why I love it so much. It doesn't, the market's going down, gold's going up, the market's going up, gold's usually consolidating, giving us great cash flow opportunities or just drifting, to the upside. It's been a very friendly product lately.
Yeah, I'm with you. Let's talk some companies here today. We got to start with Deere. And one of my favorite parts of our show, by the way, after we go through the broad markets, is the individual corporate news and the patterns and all that stuff. Frank, Deere actually breaking out of a multi-year high if it can hold up here and actually run from here. Surprise earnings, surprise Q1 profit. They came out and actually had a real good report. Frank, what was your reaction to Deere here? And is it something you're going to put on watch list?
Oh, I was pleased. I thought it was a solid report, and more so than that, I was very happy with the reaction. And I like how we're developing today. We ran up into resistance. We're hanging around, right? Potentially giving us an opportunity to consolidate a little bit and then break, in the next week or two. I absolutely think that, this should be on a watch list. It's tough sell to trade tomorrow. I mean, or Monday, I guess I should say. But, anytime something's, knocking on the door of all-time highs and major resistance zones, yeah, I think it should be on a list.
Apple Computer, actually one of the things about yesterday that I think spooked the market a little bit yesterday, now it's spilling into today. Apple actually came out and reaffirmed and said that there's going to be some supply disruptions in their supply chains from this stuff going on with COVID-19. Stock is coming back a little bit. That was one company did it, but then Procter and Gamble actually said the same thing. I mean, maybe this is what is actually going to take for investors to start paying attention. By the way, Procter and Gamble says that, and then here we are, they're breaking out. So
yeah, look, that's a pretty good looking bullish chart.
That is a very, I've had it on the list, for a while because it's Procter and Gamble and they just don't really, it's more of a position trade. But I've been kind of kicking myself because it's been so good for, hypothetically, at least, I don't know personally, but it looks like it's been so good for cash flow while it's been hanging up here. But very, very nice movement today.
I totally agree. Noah, you can give that one whistle.
I will.
I think the Apple chart, though, is the interesting one. I heard Noah say 1 or 2 days ago that he likes it more now than he did, going into this upcoming week. And I would say
now I
that
changed my mind. I totally changed my mind. Two candles ago. You can't hold me to my opinion 2 candles ago.
listen, I was supporting your opinion. I like your opinion more than you do now.
Well, that's true. Well, you know what? It's still a good consolidation, and if it breaks out, I'm good with that. But if it at this point in time, I'm wondering if it's going to need a little help from the 50, where this consolidation kind of hangs out in here, and it may take a while for it to get out and take out those highs. Especially if they are, expressing that they've got, interruptions in the supply chain. We're seeing a slowdown in sales. Again, I think this is probably one of the more susceptible to COVID-19 news stocks out there.
Yeah, I mean, they do so much business around the world. They get so much of their product from China. Absolutely. And even semiconductor stocks, by the way, it's not just Apple, because how many of the semiconductor companies have factories in China where they get those parts or whatever it might be? Speaking of which, one of the market darlings, AMD, down 3.5% today. So sometimes when you just follow the 5.5% now, follow the market news, and this has been a beautiful runner, it's an amazing stock. It's one of the best performers in the market here year to date. But when the news is going to impact a company like that directly, you're going to see a deep pullback.
Well, and AMD and stocks like it, they can be pretty volatile anyway.
Yeah.
They can have some pretty good sized candles. This needs development, but how do you not love this as a potential retracement, mid next week?
I'm with you. 100% with you. I would love to see that thing, kind of come back, slow down, doji, pivot. It gives you a new entry point. No, at the end of the day, traders like volatility up and down because that's what's creating our opportunities to make entries,
Yeah, we love volatility, except for when you're on the wrong side of it.
That's right.
But we love volatility because you rely on it. If you don't have volatility, it gets to that point of the market's so boring, it's not worth hanging around.
Sure.
But when you have volatility, there's movement there. There's action to be had.
Yep, you bet. You bet. All right, moving on to Dropbox, by the way. This is an interesting company. I use the product Dropbox. I know they've got competition. Frank, you and I were talking before the show, and Google Drive and other cloud storage companies and all that kind of stuff. But we use Dropbox all the time.
Yeah,
they came out and blasted out the earnings, had a great report. Frank, give me a read on this.
I don't know what you do with this other than celebrate if you own Dropbox as an investor. But technically, while very difficult to do anything in the shorter term, we took out major resistance. We took out the 200-day moving average. We're off of the highs, but we're still up, 21% on the day, something like that. I don't know what you do with this if you're looking to create a new trade personally, but I think you have to like it. And I was just headline surfing, but one of the headlines I saw was they expect to be profitable by the end of the year. Now, whether that headline's true or that's right, I don't know, but it is positive. You gotta like the price action. Again, I don't know how you trade something like this, it just with where it's developed at right now, but I'd have no objection if somebody likes this company. I kind of think Dropbox just kind of has that name recognition.
Sure.
That's kind of what I think about when I think about that. I don't think Google Drive, I think Dropbox, and maybe just because I'm slow, I can only.
I think there's some real value in their product, specifically the way they integrate with certain applications and whatnot. So I like them, and I love their scanning tool. Like if you ever need to, like when I draw up on the whiteboard in mentorship these days, Emily, back when you did mentorship, we just take picture, right?
Yeah.
Now I use my Dropbox app. It converts it into a beautiful image, takes the gloss out of it, and sends it right to my file storage.
Oh man, now I want to do over.
Yeah, right. It's a really good product. So, and that phrase, Frank, path to profitability. I know that's a catchphrase with new companies, but if they can get profitable this year, they didn't IPO that long ago, guys.
No.
They're relatively a new company. So pretty good. Noah, obviously you can't trade that gap out, maybe bar by bar, I guess, but it would take some marinating here, some development before there's a pattern.
Agreed. Yeah, it's hard to trade that knee-jerk reaction. You might. This is one of those that I would be tempted to shoot the gap down to the 200 period moving average, but it would have to go and take out today's low, and that's a trade I'd probably see maybe next week, not this week.
Sure. Yeah, I'm with you. Move on to Twitter. I got to get you guys' take on this. And here's the thing. Twitter, Frank, is a cesspool. You can find great things on Twitter. You can make it a positive experience, but we all end up getting drug into all the debates and all that kind of stuff. It's the nature of how it is. They're considering the thought police, essentially, Noah, where they're going to label tweets from politicians and public figures. If they are known to be lying or giving misinformation, they're going to give it like a little stamp, or they're going to color code it so that the public knows that it's a lie. Noah,
well,
how do you
it's a
feel
tough
about
one
that?
because wouldn't all politicians' tweets be all that color all the time? I mean, shouldn't they just call it the political font?
I was going to say they're going to use a lot of colors.
Do you give him any credit for trying?
I think what I would like to have is a PG version, PG-13 version of Twitter, and then an unfiltered version. And I don't want any thought police on anything. You gotta, in a free society, people have to be able to be fooled. Yeah, if you want a free society, you can't control everything, and so you can't control the thought police, and you can't. Who's the gatekeeper is the question with that.
Yeah, Frank. I mean, we're country kids. We don't trust this, obviously.
Not even a little bit. Not even a little bit. But the dodo never misleads me, and so I'll continue to follow them.
I don't know if I follow the dodo. I might have to go check this out.
Listen, if you're not following the dodo, you are missing out on some joy in your day.
I'm going to ask. I'll check out the dodo as well, by the way. I don't think I follow that account.
Well, I am following the dodo now. Very cool, Frank. Thanks.
I want to ask the community out there, and maybe there is a counterpoint here that, Emily, maybe potentially these social media companies have such an influence over elections and economies and everything. They should try to do factually what they can. But obviously where Noah and Frank and even myself have concerns is, who controls it? Who gets to decide, and how do they determine what is true and what's not? Emily, is this positive? Does this even impact you? Are you like, I don't care, Tim, move on? Like, what's your reaction to a story like this?
The dodo's delightful, by the way.
And did I lose? So Emily has no opinion.
You froze because I didn't hear anything that you said. But
no, it was a perfect reaction. It was the exact way you should have reacted.
It was.
Because I was asking for your opinion on this, and then you just are staring at me.
I should have been mad. I should have played Matt's role and just not said anything.
Yeah. No, I don't know. I'm concerned about this kind of stuff. I understand why they would want to try to do something like this, but again, you're concerned, Noah. You're concerned, Frank, is where I'm at. And by the way, I did see another news on social media on the same topic, Facebook. Bring up Facebook real quick here, guys. Mike Bloomberg has been paying staffers to post, and who's surprised by this, by the way? He's been paying people to post positive posts about him. And I guess you're supposed to, if you're doing advertising or marketing or political campaigning, that is supposed to be claimed, right? You have to let people know you're doing that. Facebook is coming out and forcing him to do that. So another kind of regulation here. Social media is in a tough spot, guys, because they want to probably have as much freedom and let people just have the Wild West. But then you have politics involved, Noah. Do you think social media has a role and a responsibility to try to facilitate these kind of things?
That's a question that as when it comes to answering, I'm always going to err on the side of freedom of speech. And yes, they should be able to control certain things, but again, who are the gatekeepers is what it comes down to. And the minute you try to regulate, you're going to end up with a whole lot of unintended consequences. And, people who otherwise are not being problematic will end up getting filtered and shut down. So, should politicians disclaim those things? Yeah, I think that's probably reasonable to say, paid for by Mike Bloomberg or paid for by whoever. Because then at least, it's propaganda. But other than that, man, I'm really hesitant to say we should have controls.
Whatever happened to just common sense? If you're letting social media influence your decision making, something's wrong.
Well, what else did the computer tell you to do today? No.
Yeah, but we come from a different generation. I don't know, guys. We all know it does have a big impact. It can impact elections. It can impact all kinds of stuff. I don't know. I don't know what the right answer is. I'm a First Amendment guy. I'm a free speech guy. Like I think everybody should be, quite frankly. I don't like this, but it also makes me, from a Wall Wall Street perspective and from an investor perspective, why are these companies doing it? Is it to stave off some perceived risk that they're seeing in their future? Are they worried about government regulation coming in, maybe slapping a fine on them if they don't do it? I don't know. My instinct, Frank, is always follow the money. Does Twitter make more money by doing this, or is this just their social justice kind of move? I don't know. We'll have to debate this one on a podcast probably. Let's move on to some companies that are grabbing my attention. Somebody interpret Slack here. Work. Give me Work.
Tell you what, Work's pretty cool. We had a really fun conversation about this in the Traders Lounge this morning. We had Seth was walking me through a really cool risk-free trade she'd pulled off. Wow. Congratulations to Seth. This is coming off of a solid bottom, Tim. This is a really protracted triple bottom where it came down, maybe even a quadruple bottom. But it's violated back up. It's crossed. This is the type of thing that would give you buy signals on all your oscillators. Like I think I've got a chart here with like every oscillator known to man on it, where they've all given buy signals. Stochastics, MACD, like hey, it's a buy across the board. But it's slowing down out here at the top. So if you switch to a weekly chart, it's got a little doji action in there slowing down. But I love the recovery after the IPO. As far as that goes, finds bottom, pop. I'd like any pullback off of this, I think.
Yeah. See, and I think the news today was they were going into some kind of not partnership, but they got Uber as a client. Uber's going to start using them internally and all that kind of stuff. More companies are going to come out with these announcements, Frank. We're fundamentally bullish on Slack here. The tricky part is that candle today gapped out to 30, backfilled here. I don't know where the next entry is. I mean, would we wait for a breakout up above 30? Frank, how would you approach a pattern like this?
Well, it's a tough one on a day like today. You ask yourself, would you like a pullback? If the answer is yes, you need some selling. If you need a breakout, you need probably some consolidation. You probably need some development to occur before that happens. So, for me, I would probably say I want to see it kind of consolidate just below $30 for the next week and then break above that. And that would be a tradable signal. Do I get that? It doesn't hurt to ask, right? So as opposed to the pullback, although I'd certainly understand the pullback traders here, a pullback to the old breakout point maybe could be interesting, but we're talking weeks realistically on that type of a setup. And we've got a lot of overall momentum right now. So this is going to be one you have to think about, think ahead. What would you personally like to see? I'd like to see a consolidation below 30 with the breakout. And my job really is to be there if it happens to make a decision whether or not it's worth taken or not.
Yeah, and it is on our dirty, sexy money list, by the way. The number one performer on that list here today. Almost everything else is down on the day with the markets down, but it is up even on that red candle. Another one that's performing great here on the Tackle 25, Noah, is Newmont Mining. And I got to tell you guys, this was a beautiful trade setup. It was a beautiful chart. You had the retracement, you had the confirmation, then the breakout follow through. Is this a profit-taking location up here, guys?
At a minimum, you should be trailing a stop if you're a swing trader, but it's definitely hitting target ranges. And I think we'd put a target on that around 50, and it's getting right up in there, and the candles are shrinking. So that's always a telltale sign that, hey, if you made some good money on it, make sure you keep some of it.
So here's the tricky thing sometimes, Frank. I mean, let's say you have a target at 50. It's Friday. You've got market concerns. You've made a nice move. You've knocked down a profit. Do you hold and wait for the extra 2%, or do you take the $7 or $8 profit that you just made?
At the very least, you scale out, in my opinion. At the very least, you've got 3 calls, you sell 2 of them. You got 3 calls, you sell all 3 and spend a little coin and buy the 50 for me. You find a way to enjoy your weekend. You don't, you make I guess the best way to put it is you make the decision that you can feel comfortable with, and up that high, great earnings report, love it. I wouldn't fault somebody for sticking around, but I would personally be thinking, it's more important to lock in some gains than to go after that last 27 cents or whatever it is.
Mhm.
It's a good problem to have, in the world. These are the problems we all want, right? Do I stay or do I go? Do I lock in profits? Do I try to get more profits? I mean, no one's going to feel sorry for those problems. But I do think the prudent thing is to find a way to take off some risk one way or another, lock in some profit one way or another.
If you're watching our show right now and you have a question for us as coaches, on Friday at the end of the show, we always like to spend 10 minutes or so answering questions. We call it our mailbag, and we're doing it each Friday during Fun Day, Frank Day, Breakout Frank Day, and all that kind of stuff. While you guys are popping questions in the chat, just put them in there. We're going to answer them live for you and have some fun doing that as well. Couple of quick notes as well. If you are watching the show and you have not subscribed to our channel, click the subscribe, click the bell. Noah, we're building a pretty good audience here. In fact, I think we've seen that accelerate a little bit over the last few weeks.
Quite a bit. We're at about 100 a week, a little over 100 a week. So that's pretty awesome.
And if you're new, let us know if you're new. We love people in our community coming in. We've been doing this stuff for a long time, guys. We always like new green traders coming in so that you can learn from the actual best out there. That's tackletrading.com. And by the way, we do have a 15-day trial in the chat below and also in the comments below. So make sure that you're setting up that trial. Take a peek at ExxonMobil here if you can, Noah.
Gladly.
Bear list, Frank, there weren't a lot of setups last week, but some good breakdowns. That just confirmed, guys.
Yeah, very, very nice. In the weakest sector of them all, if I'm looking at bearish delta, that's definitely a candidate, I would say.
Yeah, I agree. I mean, here's the thing. ExxonMobil pays a dividend, all that kind of stuff. But at the end of the day, energy is bearish. There's volatility in that sector. And you just broke below a low base here, Noah. Low candle on the exactly volatility. It's only down 1%. Now, is that an entry point you would qualify or would you wait? How would you approach that?
I think it's for a breakdown. Yeah, it's an entry point. You might watch to see if it closes, and then you could go trade it bar by bar after that, where you take out today's low. But yeah, if it closes down below the support zone, that's a clear entry in my opinion. 60 was the line in the sand for me. So breaking down below this low base, it's good.
Yeah. And last one, another bear candidate here on the weekend reports from last weekend, UAA. Man, this is an interesting pattern. A lot of beginners, I think, even a lot of traders would not really understand how to read that pattern because of the gap down. There's the faulty logic I've heard in education circles around the markets for a long time that gaps always fill. Well, they don't always fill. Okay. In fact, momentum can play itself out. And Noah, here we gapped down. We formed a base. It now confirmed yesterday, following through here today. Pretty good looking pattern right there, Noah.
Yeah, yesterday I looked at it and it gave me a little bit, had me thinking about the pattern, but I like the breakdown. Gaps, often fill. They don't always fill. Sometimes they run. And if this one breaks that little support zone like it has been, this is the type of thing that runs.
Yeah, I think you have to go to the weekly chart to truly appreciate the setup on Under Armour personally.
It's pretty cool on the weekly chart, taking out that low.
Sure. Yeah.
Really that gives us some room to drop. I could see this dropping to 14 or even 12. Weekly charts skew my perspective on how fast it can move.
There you go.
Because the time frame change up, but it's a good break below a big support zone that's tested twice, and that's got room to drop. And so I think coupled with the negative response to earnings, that puts a little emotion and energy behind it. And the break, I think that's a good breakdown setup. That ought to be on our reports this week.
It was on it last week.
It was last week. And I think, we'll have to see the risk to reward profile, but I think it's still probably just eyeballing, still probably there for you. Can I bring one or two before we take some
questions?
Love
to, Frankie. Yeah, you always have the good setups.
So take a look at ABBV. Now it's moving a little bit more today than I was hoping it was going to move, but it is what it is. Nice. We recently had a nice break on a positive earnings response, established a little bit of a swing low, showing some nice upward movement, not really a lot of resistance for a little while. So that was probably the prettiest pullback I found this week.
That's pretty. That should even inspire Noah to make that creepy sound from yesterday. I mean, that is.
Oh yeah.
Oh, I don't know why I brought that up.
So you did that yourself. You have no one to blame but yourself.
Fault. Pullback, pivot, trigger, confirmation, green candle, relative strength against a market that's down. It is up. Those are the kind of setups absolutely that hit the report. And that actually probably will be on that this weekend as well.
Yeah, I believe so. And on the
Any more,
bear
Frank?
side, one more bear one, and we'll get to questions, because I got a bunch, but we got some questions. I've been watching Western Union, WU. They gapped down on an earnings report to a known support level and have been consolidating ever since, and continue to hold that support level as we looking to close the week. But definitely could see a scenario where that support gives out. There's really not a lot until the 200 period moving average, at least that I can see. So nice little base forming, may not break. It's sometimes it's easy to forget that it's difficult to break support and resistance.
Well, on a weekly chart there, that looks like a big old letter M, and you know what the M stands for, right?
I do.
Maybe it stands for maybe it's going to break down. There you go. I like it. That's a pretty setup.
I'm definitely putting this on my watch list, Frank. Western Union has had a lot of my money from sending money back to Kenya. So I look to
this is a spite trade.
To put this on my watch list.
Nice.
I've had spite trades. Bring up GE. I'll tell you how well that spite trade worked out for me. Yeah. Spite trades.
Back all my fees.
Oh, I get it. I think that's the reason why Matt has played Disney so much, by the way, is because his wife has done so many vacations to Disneyland. He's like, I got to at least make some money back. Yeah. So I get it. All right. We got questions here, Frank. I think there's a bunch in the chat. Why don't you be the guy reading them out, and then we'll kind of have a conversation about them if we can.
Awesome. Let's do it. So Mohammed, good to see you, buddy. Asked, should we be concerned about the inverted yield curve? I'll let you start with that one, T.
All right. So here's the thing. Yes, you should. What causes an inverted yield curve is many, many different things. But number one is short-term perception from investors that there's risk in the market. And it's not a good sign. I think there's some old lines about how all of the inverted yield curves have predicted a recession, but it only happens a certain amount of time. Noah, it's not a guarantee that you're going to go into recession just because the yield curve inverts. But it is a concern. It's a red flag. When should you be concerned about it? Probably when you're drinking coffee on a Sunday, not when you're trading day by day through the week. It has nothing to do with your short-term thinking, in my opinion. I mean, think about it like this, guys. Even up here at the market high, we're at the back end of a 10-year run. We have a higher debt to equity ratio we've ever seen. We've got the coronavirus and COVID-19, and yet, guys, I mean, the best plays out in the market are probably going to be pullbacks this week. Short-term trading has to separate itself from long-term financial concerns, because that's the market. Fundamental analysis, the longer you do this stuff, does have an impact. But I think traders actually make more mistakes talking themselves into Chicken Little thinking, quite frankly, where we are really worried about the perception, or we're worried about the economics. But then just trade the chart, Noah. I mean, that's my opinion in the short term. Long term, am I concerned about where the economy is? Yeah. Is the yield curve one of those factors? A little bit, but frankly, I do think it's a lot of hot air that Wall Street guys, burst out there because it's a talking point and kind of a catchy thing to say. Noah, do you agree, disagree?
No, I agree 100%. Like, it's one of those things where over time it will catch up and it matters a lot, but the market is really, this is one of the first lessons I learned. And it really, the gravity of it speaks to me more and more as I trade. The markets are driven by fear and greed. And, the current sentiment's been one of greed and very much optimistic and bullish bias. And they'll take a piece of information like yield curve and just shrug it off. It's like, well, that's not what I want to hear. The market looks bullish, and so we're going to go bullish. Now, over time, that'll be a problem, and it'll correct itself. The market is the inefficiencies like you talk about, like efficient market theories and things of that nature. They can be highly inefficient in the short term, but in the long run, they do shake out.
Yeah.
So trade the chart.
And by the way, if you have any questions, pop them in here in the chat. Emily, go ahead. Sorry, I didn't mean to.
No, I was just going to say, from a student's perspective, guys, some of these things you shouldn't, like Tim said, don't worry about them. If it's a concern, we'll bring it up here on the halftime show. Just keep trading and keep it moving.
Yeah, I agree. Trade your rules, plan your trade your plan, keep it system based. Next, Frank.
All right, let's see. We've got one on Abby V. I'll give this one to Noah. Paul just asked any concern on the lower volume on that uptrend, on that pullback.
This had pretty good participation on the last little run up. It enjoyed a spike from earnings, which positive. And then the pullback here, low volume pullback, I like. The fact that it hasn't seen a spike in volume on those first 2 days up, that I prefer to see a little increase in volume on that, but we're still partial sessions. So, a low volume pullback, actually, I really, really like. And I think there was enough participation in the pop there to make it sustainable.
Mm-hmm.
So we'll see if that can follow through.
Mm-hmm. Good.
There you go. There you go. I would agree with that. Jack, good to see you, Jack. I had a chance to meet with Jack. I guess it was probably a couple months ago. I've seen him around a lot, but we finally had a chance to actually talk. Good to see you. Fundamentals being one of the 4 pillars of trading. What esoteric numbers should we be looking for when we're, let's see if I can actually read that. What numbers should we be looking for that are more uncommon than usual?
These college kids that are trying to show us up.
Yeah, those numbers. Yeah,
Jack.
You answer that question, Jack.
By the way, Frank, real quick, Jack is from Colorado, and he was down at the Traders Expo. Emily, I don't know if you remember Jack.
That's what he said.
I remember Jack. What's up, Jack?
And Jack is also originally from Helper, Utah, Frank.
Oh, really?
His family. Yeah, they had a gas station right there.
Okay, I knew some Vias growing up. I had a kid that I went to school with, so he probably a family member.
Yeah, let me try to understand your question here, Jack. Long time no see, coaches. I was thinking about stock valuation fundamentals are one of the 4 pillars. What esoteric numbers should we be looking at? Dude, growth has been beating value for 25 years. I'm the wrong guy to ask on this. I'm starting to really think PE ratios just give you context. You can't just say low PE ratios, guys. I mean, it's not the market we've been in for a very long time. I wish Matt was here. We would have this. We would have a royal debate about this. But no, go ahead.
Yeah, Matt, this is a Matty question. He loved this one.
Well, fundamentals matter, but the efficiency of the market, again, it's being very driven by greed and growth. And so, a lot of your fundamental metrics fail to keep up with market pricing. And, I think it's more valuable when in a bear market correction. Mm-hmm. Like when you're at the end of the day, after the market's gone through a correction, you're wondering which stocks to pick up, after you get a correction, well, then price to earnings ratios to probably come back in line. Mm-hmm. Some of the other metrics will come back in line. And I would rather, pick a company that runs well, that's cash rich, that doesn't have big debts, because they'll fare better when the market's correct. But when the market's correct, even the best companies are going to go down.
Sure.
So I think trade management, trade plan, and risk management trump the fundamental pillar, which is important. You don't ignore it. And the longer term you're going to be in a trend or in a trade, the more important that fundamental is. But if you don't have a good trade plan and good risk management, fundamentally picking stocks is not going to benefit you very well.
Yeah. Yeah. I got to look up the word esoteric. I don't know if I don't know.
It's out there. It's fuzzy. It's in the cloud. It's hard to conceptualize. It's esoteric.
Yeah. That pretty much sums it up. But it is a little more difficult when you're at market highs, versus market lows for sure.
Yeah. I mean, there's several things I do look at, Jack, from a fundamental perspective. PE ratios, PEG ratios, valuation metrics are an area that I do look at. But then I also have to backfill it against the context of what kind of company it is, right? Like we were talking about Dropbox. Dropbox has a great earnings. I bet they have a negative PE ratio. I'd almost guarantee it. They've not been profitable, right? So does that mean it's a bad company? No, it just means it's a new growth company. Negative PE ratio and high PE ratio companies, you've got to believe in their product. You got to believe in their path to profitability. And they usually got to see increasing sales numbers, and they've got to see all kinds of stuff, the ROE numbers that are strong, and those types of metrics on the revenue side and the earnings side to kind of formulate that opinion. But then again, whether or not I play any of this stuff as a swing trade or a position trade, probably is going to come back to the chart most of the time, right? It's a really, really good question, actually. And I would love to debate this one with Matt on a podcast, everybody here as well. I mean, Emily, you focus on charts mostly. Fundamentals help you build your list. Is that the way you use them?
Yep. Fundamentals help me build my list, but mostly it's the chart and price action.
Yeah. And Gino, my man, I don't know if I see your face and I see you popped in here. I don't know if you're on your computer right now. This would be a good one for you, Gino. Gino, you actually look at a lot of fundies when you're making decisions. I mean, how do you approach fundamental analysis with your trading in 2020?
Well, here's the thing: as you're starting to build your account bigger, you got two choices. You can do bigger size positions or more positions. And the bigger your account gets, the more you put in a trade. It's all about allocation. When you cross that threshold of, wow, am I really putting this much money in this company? All of a sudden your brain goes, what do they do? Who's their competitor? Is there somebody better? So the fundamentals are kind of like a tiebreaker between, for example, Home Depot and Lowe's, AT&T and Verizon. If I'm going to buy a company that I want to invest in, not trade, meaning no stop loss, do I want to put a stop loss on this or cost average? Would you cost average a company with no earnings? No way, because they could go bankrupt, right? Would you cost average if it dipped down on a company that had phenomenal earnings? So that's the thing, is it helps you decide, is this a good investment type position or a trade?
Sure.
And if I'm going to put a lot of money in there, especially if you're managing big accounts, you don't have time to be trading millions of dollars and a whole bunch of positions. I remember I had over 80 positions in my account. I said, wow, if the market crashes right now, which one of these companies or how many of them are going to go bankrupt? I was around in the .com era. Do you guys remember what percent of companies filed bankruptcy?
I don't know.
It was over 80%. It was like 88%.
Of tech companies that were part of the bubble?
Of .com specific companies like pets.com and diapers.com and all those others.
Lucent.
Yeah, but you've got a little bit of that feel here in 2020, don't you? A lot of these IPOs.
So here's the thing is, Warren Buffett, you can't argue that. He's one of the best investors, not traders, best investors ever. He loves market crashes because he looks for good fundamentals. So there's something to be learned there. And so when you build your watch list, it's just one more out of many indicators, one more tool in your arsenal that, you know what, my watch list, yes, it's stocks that I can position size. I know what they do. I know the company. I know the management. I know the CEO. I know what they do. And they're the best as far as turning a buck. They're the best at profit. They're the best at what they do in that industry. They're the ones that are not going to go bankrupt. For example, what's a bond? A bond is guaranteed payment, right? That's fundamentals. That's fundamentals.
I'm with you, but even like Warren Buffett's a great example. He is a value investor, right? Always looking for a deal, waits for a market crash. Guess what he bought last quarter? The SPY and VOO, and he pumped more money into ETFs that have low fees. And by the way, his 13F filing is showing that he continues to buy stocks at EPS numbers that are not EPS, but PE ratio numbers that are the second highest on the Shiller PE ratio we've ever measured. So this value investing stuff is very valuable. It's amazing. There's no question about it. In 110-year history, it's been a way to build wealth. And I'm not going to argue at that point. But you also have to have the skills to understand growth investing too, don't you think?
Yes. Growth investing and momentum investing. William O'Neill, when he did Investor Business Daily, he has a value that's still tried and true today by many, called Canceling method, value investing, GARP, growth at reasonable prices. And what that is, he looks for fundamentals, and a lot of fundamentals do this, where the stocks, they're on the low end of the fundamental, low PEs, but high growth. Why? Because they have to have that growth potential to where, yes, they got good fundamentals, but can they double in price? Like you're not going to see a utility company usually double in price, except for this year, right?
Yeah, if you watched the last year.
Yeah,
the utilities were unbelievable.
But yeah, and it's like, wow, they've never had PEs this high.
Yeah.
But you're going to get companies like Amazon are still growth companies.
Yeah.
What was that one? Beyond Meat's a growth company. Yeah, horrible fundamentals. Work, Slack, all that stuff, Shopify, all these companies that are brand new, they're growth companies. They're reinvesting their money. They're not going to show a lot of bottom line profit.
Yeah.
So you have to believe in the company and know what they do.
Yeah.
But again,
management right there, product management, service, what they do. Yeah, I'm with you.
So my biggest thing is if you're I treat everything I trade. If you're going to hold it through earnings, if you're going to be an investor mentality without a stop, you should know the fundamentals because you might be stuck holding that thing and hoping it outlives you.
And I think
I think it's good advice.
that's the best point. If you're an investor, the fundamentals are going to make a big impact, right? If you're a trader,
my theory is this: the
not?
longer you're going to hold a stock, the more you have to know it.
I'm with you. I love that. And by the way, I think I figured out how to trigger myself. Jack, if you ever need to trigger Tim out there, you want to get a rant, just use a word I don't know what it means. All right. And that's going to spin me into a spiral here. Guys, fun show, great show. We've got work to do. We've got our scouting reports to build. We got to get back at that. If you are not a subscriber yet, click subscribe, click the bell. Noah, pitch our product, our 15-day trial. I know you'd be good at it.
Well, it's really hard to pitch the product that pitches itself. It's a great value. We've got an awesome community over at Tackle Trading. We got lots of education even for brand new people who are brand new. If you didn't understand some of the stuff, today, we have some training for you on that. We've got trading systems. We have scouting reports. And I think best of all, we just got an awesome community and coaches that care. And we got that 15-day free trial always running. So you can get in, check it out, get to know us. And, our hope is that once you get to know us, that like the rest of our community, you stick with us.
Yeah.
So, yeah, what I would say is everybody in the chat ought to give us a shout out. If you love Tackle Trading, type it in the chat.
I like that a lot. And Emily, cannot forget you. The Women in Trading initiative is a passion of yours, something you've been building for years now. We've got a vibrant community of women who are traders, and you have a webinar tonight for that. Kind of explain how people can join, what it is, walk us through that.
Okay, well, Women in Trading is an extension of Tackle Trading, but it's just for the ladies. I know many of you guys have attempted and failed badly and bigly to get in there, but but it's just really a special segment just for the ladies, because trading for us is just, it's a little bit harder in the sense of, we take care of family, kids, relatives, whatever. We work, we do so many other things, and we somehow have to incorporate trading into our world. And sometimes we put that in the back burner. And, the thing is, for me, is just to get us to make sure that we keep trading just as active in our daily lives as everything else that we do. So that's our little once a month get together that we have, and we just have fun doing it. We're going to go over some of the trades that we worked on last month, check on the results and see how they did. If you want to be a part of it, you're welcome to join us tonight. There's a link on Tackle Trading. Just go on there, find the Women in Trading tab, and join the webinar.
I love it.
I hear so many good things about it, because I talk, whether it's, Twitter or Clubhouse or whatever, I constantly hear great things. I know you guys get a lot done, but I know you have a lot of fun too. We're jealous. But we're happy for you. And I know you do an awesome job.
I'll do a poll and see if the girls want to invite one of you guys at a time. I can't have you all there.
That's just opening up something.
It's not going to happen.
We'll fix the numbers. Everybody voted no. We'll save you the trouble.
Even if I got the invite, I would be skipping tonight. I got two things going on. My daughters have a cheer competition, but more importantly, big shout out to my nephew. He'll never hear this, but I'm so proud of him. High school senior in the semifinals of the state championships. Noah, last game, he scored 18 points, knocked down 6 3-point shots, and they're playing our arch rivals for 100 years from Richfield, Utah. So Richfield Emory tonight. I'm going to be there. High school basketball.
Nice.
I hate those dirty jerks from Richfield.
Yeah. Always. It's good times. Good times. All right, guys. Great job. We'll see everybody on Monday. Have a great weekend.
Thanks for having me, Halftime Crew. You guys have a great weekend.
Bye, all.